There's a city where a basic 1,200 square foot starter home now costs over $1 million, where the household income required to buy has nearly doubled since 2020, where you need $458,504 a year to afford a median home, and where the local conversation still pretends it's just a temporary supply issue. The city is San Jose, and it's not even the worst on this list when you factor in carrying costs. Across America, the housing story of 2026 has been quieter and stranger than the headlines suggest. The starter home didn't just get expensive, it structurally ceased to exist. According to the June 2026 Harvard Joint Center for Housing Studies State of the Nation's Housing Report, 242 U.S. cities now have median starter home prices exceeding $1 million, up from just 80 in February 2020. According to Zillow's June 15, 2026 analysis, the typical starter home nationwide is now worth $198,649, while 26 states have at least one city where starter homes cross the seven-figure line. According to Harvard, home ownership rates declined for the second consecutive year to 65.2%. According to Redfin, households now need annual income of nearly $117,000 to afford the average median-priced home, up from roughly $63,000 pre-pandemic. And underneath those numbers, property taxes are up 31% since 2019, and home insurance is up 72%, destroying the monthly payment math even for buyers who can clear the down payment. This isn't a temporary market fluctuation. This is a structural reset of the American middle class. In this countdown, we're exposing 10 cities where no one can buy a starter home anymore. One city requires nearly $500,000 of annual income. Another has 63 municipalities in its metro crossing $1 million on starter homes. A third has homeowners spending 55% of income on housing. You probably did everything right. The math still says no. Subscribe before your city's starter age. Math gets worse. Let's break it down. Number 10. Portland, Oregon. The city of roses, where the climate migration narrative ran headfirst into a starter home market that priced out the migrants before they arrived. There's a city where the income required to afford a median home crossed $140,000, where the metro area added multiple municipalities to the $1 million starter home list since 2020, and where the affordability narrative the city built has been quietly replaced by a math nobody talks about. Welcome to Portland. The numbers. Portland Metro now has multiple cities where starter homes cross $1 million per Zillow 2026 analysis. Portland income required for median home purchase reached approximately $140,000 in Q4 2025. Portland Metro home prices climbed approximately 60% between 2019 and 2024. Urban growth boundaries continue to constrain new single-family supply. What it's like. Living in Portland's housing market is like dating someone with strong opinions about sustainability who keeps quietly tripling the rent. Picture this. You're a 34-year-old professional in Portland in 2026. You make $95,000. You did everything right. Your savings cover the down payment on a $480,000 condo, not the $720,000 starter home you actually want. Where it gets uncomfortable. Portland's structural problem is that climate-driven migration drove demand, while urban growth restrictions limited supply. The buyers kept arriving. The starter homes did not get built. The result is a market where Portland's affordability brand evaporated faster than the city's planning department could acknowledge. Sharp contrast. Portland and Indianapolis are both mid-sized U.S. cities. Indianapolis' median home price sits at roughly $245,000, less than half Portland's. Same country, very different starter home math. Number 9. Miami, Florida. The magic city where the no state income tax marketing has been buried under insurance costs that turn the monthly payment math into a horror show. There's a city in the metro area that contains 8 separate municipalities where starter homes cross $1 million, where home insurance premiums averaged $7,562 statewide in 2026, where the condo market just shed $109 billion in value in a single month, and where the carrying cost math kills the deal even when the purchase price looks possible. Welcome to Miami. The numbers. Miami Metro contains 8 cities where starter homes cross $1 million per Zillow 2026. Florida average home insurance premium reached $7,562 in 2026, the highest in America. Miami-Dade condo inventory hit 14.1 months in 2025. Florida lost an estimated $109 billion in total home value in a single month in 2025. What it's like. Living in Miami's starter home market is like dating someone who says dinner is free, then charges you $500 for the silverware. Picture this. You're a 38-year-old professional in Miami in 2026. Your savings cover a $620,000 condo. Your insurance quote arrived at $14,000 a year. Your HOA assessment after Hurricanes Helene and Milton was $9,800. You're starting to research North Carolina. Where it gets uncomfortable. Miami's structural problem is that the purchase price isn't the killer anymore. The carrying costs are. The insurance premium tripled. The HOA assessments arrive in 5 figures. The condo regulatory reforms post-Surfside produce 6-figure special assessments without warning. Sharp contrast. Miami and Raleigh are both southeast cities. Raleigh Metro home insurance averages roughly $1,500. Miami averages $7,562. Same region, completely different carrying cost math. Number 8. Denver, Colorado. The mile-high city where the income required to afford a median home pushed past $140,000, and the wildfire in soaring handled the rest. There's a city where Denver Metro home prices climbed approximately 38% between 2020 and 2025, where statewide home values have started declining roughly 4.3%, where multiple insurance carriers have reduced wildfire coverage along the Front Range since 2023, and where the cumulative cost of staying has compressed faster than the cost of leaving. Welcome to Denver. The numbers. Denver income required for median home purchase reached approximately $145,000 in Q4 2025. Denver Metro home prices climbed approximately 38% between 2020 and 2025. Colorado wildfire insurance carriers have reduced coverage in multiple counties since 2023. What it's like. Living in Denver's starter home market is like dating someone outdoorsy and gorgeous whose monthly expenses you didn't fully understand until you moved in. Picture this. You're a 41-year-old in Denver in 2026. Your salary is $120,000. Your starter home options sit at $680,000 minimum. Your insurance premium climbed 28% in 2025. Your spouse is doing the math on Phoenix, where it gets uncomfortable. Denver's structural problem is the layered cost increase that homeowners did not model. The home value plateaued. The insurance kept climbing. The property tax kept climbing. The carrying cost gap widened against a stable home value. Sharp contrast. Denver and Cleveland are both major U.S. cities. Cleveland median household income required for median home is roughly $66,280. Denver requires approximately $145,000. Same country. Very different income thresholds. Hey, before we get into the top 7, the cities we're about to cover are the ones where the starter home math has been most extensively documented in Harvard JCHS data, in Zillow's June 2026 analysis, and in Redfin affordability reports. If this list has been useful, hit subscribe, because the next one is 10 American cities where the property tax bill due % doubled, and you'll want to see if your city is on the list. Like the video if you watched your home value double and your kids move 3 states away in the same 5 years. Drop a comment if your city's starter homes just crossed the $500,000 mark. Now let's keep going. Number 7. Seattle, Washington. The Emerald City where the tech premium meets the construction bottleneck, and the income requirement crossed $140,000 while wages slowed. There's a city where the metro area contains 8 separate municipalities where starter homes cross $1 million, where the income required to afford a median home reached approximately $145,000 in Q4 2025, where tech sector employment growth has slowed substantially in 2025, and where the broader Northeast Pacific affordability story has caught up faster than the political conversation acknowledged. Welcome to Seattle. The numbers. Seattle Metro contains 8 cities where starter homes cross $1 million per Zillow 2026. Seattle income required for median home purchase reached approximately $145,000 in Q4 2025. Seattle tech sector employment growth slowed substantially in 2025 as major employers announced layoffs. What it's like. Living in Seattle is like dating someone in tech who keeps insisting next year will be the year everything works, while the rent keeps climbing. Picture this. You're a 36-year-old software engineer in Seattle in 2026. Your salary is $165,000. Your starter home options sit at $850,000 minimum. Your team got selective layoffs notice in March, where it gets uncomfortable. Seattle's structural problem is that the tech employer base that drove the demand has shifted to slower hiring and selective layoffs. The home prices reflect 2021 demand. The hiring reflects 2026 reality. The buyers who fueled the boom have stopped showing up at the volumes the market priced for. Sharp contrast. Seattle and Pittsburgh are both major U.S. cities. Pittsburgh income required for median home is approximately $64,106. Seattle requires more than double. Same country, very different math. Number 6. Boston, Massachusetts. The hub of the universe, where the income required to buy a median home nearly doubled since 2019, and the local government still calls it a temporary supply problem. There's a city where the income required to afford a median home reached $190,158 in Q4 2025, up from approximately $101,895 in Q4 2019, where the Massachusetts statewide cost burden has climbed to record highs, where new construction has remained constrained by zoning and lot size requirements, and where the cumulative effect on younger buyers has been documented in record outmigration to nearby states. Welcome to Boston. The numbers. Boston income required for median home purchase reached $190,858 in Q4 2025, up from $101,895 pre-pandemic. Massachusetts homeownership rate declined alongside the national trend to record lows for buyers under 35. Boston metro home prices climbed approximately 40% between 2020 and 2024. What it's like. Living in Boston is like dating someone with prestigious credentials who keeps quietly raising the cost of every date. Picture this. You're a 32-year-old professional in Boston in 2026. You make $110,000, well above national median. Your starter home options sit at $720,000 minimum in any neighborhood you'd actually want to live in. Your savings cover roughly 60% of the required down payment. Your spouse has been researching New Hampshire for 6 months. Where it gets uncomfortable. Boston's structural problem is that the wage growth that kept pace with home prices in the 1990s and 2000s decoupled in 2020. The salaries climbed. The home prices climbed twice as fast. The income threshold required to buy doubled while wage growth stayed roughly proportional to inflation. Sharp contrast. Boston and Indianapolis are both major U.S. cities. Indianapolis median home price sits at roughly $245,000. Boston median sits past $700,000. Same country, completely different start. Our home outcomes. Number 5. New York, New York. The Empire State Capital, where the metro area contains 63 cities with $1 million starter homes, and the income required to buy a median home doubled since 2019. There's a city in a metro area that contains 63 separate municipalities where starter homes cross $1 million, where the income required to afford a median home reached $200 and $280 in Q4 2025, where homeowners spend roughly 55.2% of household income on housing costs, and where the cumulative price pressure has produced the largest documented affordability gap in modern American urban history. Welcome to New York. The numbers. New York Metro contains 63 cities where starter homes cross $1 million per Zillow 2026, the most of any metro. New York income required for median home purchase reached $200-$280 in Q4 2025. New York homeowners spend approximately 55.2% of household income on housing costs. New York State has 41 cities with $1 million starter homes, up from just 12 pre-pandemic. Reddit, quote, "A starter home used to mean a fixer-upper. Now it means a $1 million teardown you still have to waive inspections for." What it's like. Living in New York's starter home market is like dating someone who demands a six-figure salary just to let you split the rent on a studio apartment. Picture this. You're a 35-year-old professional in Brooklyn in 2026. You make $130,000. Your starter home options sit at $850,000 minimum. Your friends who moved to Charlotte in 2022 own 3-bedroom houses with yards. Where it gets uncomfortable. New York's structural problem is that the Northeast hasn't responded to the housing shortage with the supply expansion the Sun Belt deployed. The new construction has lagged for over a decade. The result is a market where 63 cities in a single metro have crossed $1 million on starter homes. Sharp contrast. New York and Charlotte are both major U.S. cities. Charlotte. Median home price sits at roughly $385,000. New York Metro median sits past $700,000 with carrying costs that add another tier. Same country, very different post-pandemic trajectories. Number 4. Los Angeles, California. The City of Angels, where the metro area contains 33 cities with $1 million starter homes, and the income required to buy a median home reached $224,190. There's a city in a metro area that contains 33 separate municipalities where starter homes cross $1 million, where the income required to afford a median home reached $224,190 in Q4 2025, where wildfire risk has been reassessed by every major insurance carrier since the Palisades fire of January 2025, and where the cumulative pressure has produced sustained outmigration to Nevada and Arizona. Welcome to Los Angeles. The numbers. Los Angeles Metro contains 33 cities where starter homes cross $1 million per Zillow 2026. Los Angeles income required for median home purchase reached $224,190 in Q4 2025. State Farm and Allstate stopped issuing new home policies in California in 2022 to 2023. The Palisades fire of January 2025 destroyed over 6,000 structures. What it's like. Living in Los Angeles is like dating someone famous whose entire financial structure depends on you having a higher net worth than you do. Picture this. You're a 39-year-old creative professional in LA in 2026. You make $145,000. Your starter home options sit at $890,000 minimum. Your friends in Phoenix bought a 4-bedroom for $560,000 with the same income. Where it gets uncomfortable. Los Angeles' structural problem is the convergence of wildfire risk reassessment, sustained price pressure, and insurance carrier exits. The fire risk reset every major carrier's California exposure. The premiums followed. The income required to buy crossed $220,000. The buyers under 40 increasingly cannot make the math work. Sharp contrast. Los Angeles and Phoenix are both Sunbelt cities. Phoenix median home sits at roughly $445,000. Los Angeles sits past $900,000. Same Sunbelt region. Very different math. Number 3. San Diego, California. The plumed serpent city where the climate is perfect, the beach is real, and the income required to buy a median home crossed $235,000. There's a city where the income required to afford a median home reached $235,343 in Q4 2025, where home prices have climbed faster than wages for the past 15 years, where wildfire and insurance pressures compound on top of the price premium, and where the cumulative effect on military families stationed in San Diego has produced sustained relocation requests. Welcome to San Diego. The numbers. San Diego metro income required for median home purchase reached $235,343 in Q4 2025. San Diego metro home prices climbed approximately 50% between 2020 and 2024. San Diego has been particularly affected by California's homeowners insurance crisis, with multiple carriers reducing coverage. San Diego, naval families relocating receive housing allowances that have not kept pace with local home prices. What it's like. Living in San Diego is like dating someone gorgeous whose monthly expenses keep multiplying while their explanation keeps shrinking. Picture this. You're a 42-year-old in San Diego in 2026. Your household income is $185,000. Your starter home options sit at $920,000 minimum. Your math does not work. Where it gets uncomfortable. San Diego's structural problem is that geographic constraints, the Pacific to the west and Mexico to the south, fundamentally limit supply expansion. The land is bounded. The buyers are not. The price pressure compounds. Sharp contrast. San Diego and Austin are both Sunbelt growth cities. Austin median income required is roughly $145,000. San Diego requires $235,000. Same migration story. Very different math. Number 2. San Francisco, California. The Golden Gate City, where the income required to afford a median home reached $321,463, and the monthly mortgage payment alone crossed $7,500. There's a city where the income required to afford a median home reached $321,463 in Q4 2025, where monthly mortgage costs alone exceed $7,500 on a median-priced home, where the metro area contains 37 cities with $1 million starter homes, and where the tech sector restructuring has compressed the buyer pool that historically absorbed the premium. Welcome to San Francisco. The numbers. San Francisco income required for median home purchase reached $321,463 in Q4 2025. Monthly mortgage costs exceed $7,500 for principal, interest, taxes, and insurance. San Francisco Metro contains 37 cities where starter homes cross $1 million per Zillow 2026. What it's like. Living in San Francisco's starter home market is like dating someone wealthy who keeps mentioning their friend who makes triple your salary and lives in a smaller apartment. Picture this. You're a 38-year-old senior engineer in San Francisco in 2026. Your salary is $245,000. Your starter home options sit at $1.4 million minimum. Your colleague accepted a remote role in Austin and bought a 4-bedroom for $580,000. Where it gets uncomfortable. San Francisco's structural problem is that even the high-income buyer pool the city was built for has been priced out of the starter home tier. The income threshold has crossed $320,000. The remote work options have removed the lock-in that previously forced acceptance. Sharp contrast. San Francisco and Austin are both tech-anchored markets. Austin median income required is approximately $145,000. San Francisco requires $321,000. Same industry, very different post-2020 trajectories. Number 1. San Jose, California. The capital of Silicon Valley, where the income required to afford a median home reached $458,504, the highest in America by a substantial margin. There's a city where the income required to afford a median home reached $458,504 in Q4 2025, the highest of any major U.S. city, where the metro area contains 13 cities with $1 million starter homes, where the affordability ratio requires nearly $500,000 of annual income to buy a typical house, and where the cumulative pressure has produced the most extreme starter home math in modern American urban history. Welcome to San Jose. The numbers. San Jose metro income required for median home purchase reached $458,504 in Q4 2025, the highest in America per Visual Capitalist. San Jose Metro contains 13 cities where starter homes cross 1 million per Zillow 2026. San Jose area median home price sits at approximately $1.5 million. San Jose monthly mortgage costs on a median home exceed $11,000 for principal, interest, taxes, and insurance combined. Reddit quote: San Jose is the city where you need to make $458,000 to afford a starter home, and the engineer who designed your phone can no longer afford to live in the city where his employer is headquartered. What it's like. Living in San Jose is like dating someone whose minimum requirements were calibrated for a different decade and never got updated. Picture this. You're a 40-year-old senior engineer in San Jose in 2026. Your salary is $285,000. Top 5% of U.S. households. Your starter home options sit at $1.6 million minimum. Your colleague accepted a relocation to Austin and bought a 4-bedroom for $580,000 with cash left over. Where it gets uncomfortable. San Jose's structural problem is the most extreme illustration of the gap between high-tech employment and housing affordability in America. The engineers who built the product's earning, San Jose, its name cannot afford to live in San Jose. The income threshold reached $458,504. The remote work revolution removed the geographic lock-in that previously forced acceptance. Sharp contrast. San Jose and Cleveland tell two stories. Cleveland income required for median home, $66,280. San Jose, $458,504, nearly 7 times higher. Same country, completely different math. So there it is. American cities where no one can buy a starter home anymore. On the public record, in Harvard, JCHS 2026, State of the Nation's Housing Report, in Zillow's June 2026 analysis, in Redfin affordability data, and in the daily decisions of millions of buyers staring at Zillow and wondering what they did wrong. Cities where the income required to buy has doubled since 2020. Cities where carrying costs have compounded on top of purchase prices. Cities where insurance and property tax growth destroyed the monthly payment math. Cities where the starter home tier crossed $1 million across 242 municipalities nationwide. The American cities with functional starter home markets in 2026 share specific characteristics: aggressive new construction, stable insurance markets, and property tax structures that haven't separated from wages. The 10 cities on this list have the opposite combinations. The supply did not keep up. The carrying costs detached from wages. The buyer math no longer works for households that did everything right. The good news is you can know this. The Harvard data is public. The Zillow data is public. The Redfin affordability reports are public. Most people just stare at Zillow and wonder what they did wrong. If this list helped, share it with a friend who is trying to buy their first home. Hit subscribe, because next we're breaking down 10 American cities where the property tax bill just doubled. Drop a comment if your city's starter homes just crossed the $500,000 on mark. And remember, The worst housing crisis isn't the loud one with the headlines. It's the quiet one where the math changes permanently, and nobody tells the middle class.